Okay, very good morning everyone. Tuesday the 22nd of August. Let's get the briefing underway, and just while I'm talking I am just keeping just a half an eye jumping straight in on the cable chart. We're just pushing fresh lows, just seen ran into a bit of support around S1. You can see there at 28.73, and now we've subsequently broke that level. Just having a little bit of an extension on the push lower, so just keep an eye on yesterday's morning low, that's 128.62. And then anything beyond this in terms of the broader range, you can see on Friday afternoon 128.44. Just on the subject actually of cable, just while we're on the chart, you can see here we've been a fairly tight range kind of consolidation really of this point move from around 128.44 to 129.31. And certainly coming up to this level now at 62, worth keeping an eye on. That's really been the reference point for the low over the course of the last week or so. We have been lower, of course, and that being that move on Friday afternoon. But you can kind of look at cable on a slightly longer term perspective. And what is quite notable here is we certainly come off this high that we had. We were pretty resurgent in the pound, irrespective of the cloudy outlook, if you like, or the uncertainty over the Brexit situation. But we definitely had a few catalysts, and one has been inflation coming off its most highest levels. Certainly fears of the year-on-year inflation print in the UK going beyond 3% have dissipated. We've had that kind of static number of 2.6% for some time, and it was lower than expected 2 months ago, and so we have moved considerably lower from where we were, pushing a 133 handle. We're now sub 129. I guess looking here, a couple of price points of particular interest of where we stand at the moment. If I just get my cursor here, that was that initial support point that we had from mid-July, kind of bounced off that level on the 11th before really that catalyst then was the weaker inflationary reading. You know, that is such a critical reading of which the policymakers are monitoring. And then just looking at where we are at the moment, you obviously got that low that was seen back on the 12th. We have tested that just last week on Friday. And definitely if we get down to around this 128.44 type price level again in the coming sessions, looking at the intraday levels, certainly S2 is beyond that point, so it's not out of the realm of possibility. Then this certainly opens up a prospect of a deeper move here. Technically, you got the 128 handle, and then below the bigger retracement would be for the move that did occur going all the way back to then June, which we were much lower at that point, 126.25. So even though the markets generally, I mean, just looking at, from an overview of the way the charts are looking this morning, it's kind of a moderate risk on sentiment. So just to get you up to speed, we did have a positive close on Wall Street last night in regards to the S&P was up 1/10, similar to the Dow. The Nasdaq seeing some very minor underperformance, but we're talking less than 0.1%. So kind of flat to on bias, a slight positive finish. So we've had a slight gap up in the DAX future. US futures also likewise seeing a slight positive at the moment. Consequently, bunds seen lower, so reflective then of this kind of modest risk appetite. So higher equities, slight gap lower in fixed income futures, bunds down, finding some support at S1 this morning, and consequently gold also lower for the time being, so reflecting that price movement. Just having a look at the euro, so we had a pretty decent up day yesterday. Certainly I remember the dollar, when I came back to my desk just after the European cash close, the Dixie was trading up about 0.4%, so pretty decent move in the greenback. And then looking euro longer dated, I think you've just got to put into context the week as a whole. If we start looking at this as the month of August, then what we've got here is yesterday's high, that came in at 118.45.5. We're just sub pivot at the moment, downside 117 92.5 I'd be keeping an eye on, that just being the Friday afternoon high, and then any move beyond that to the downside, be looking at would have been yesterday morning's low print that we printed just as we came into the market at 117.48. So kind of this area here, using yesterday's price levels, given us a fairly decent move for the euro currency on an intraday perspective, as some interesting points to define the overall range, the high, the low, and an interim support point to be aware of if we go through this 118 handle. You know, the reason why I point out that these levels might well come into sharper focus is because Mario Draghi, of course, is giving quite a big speech tomorrow, which the market's going to be looking at very closely as to hints towards potential policy tightening going forward. And for the ECB, it's about their future of the QE program, when's tapering going to begin, and so on and so forth. On that note, a couple of interesting things here. As it's pretty quiet on the news front, I thought I'd just dig into the ECB communication in a little bit more detail, because I did see some interesting graphics from Deutsche Bank yesterday. This being one of them, and this is what it's looking at here. Hopefully you can make it out if it's clear enough on your screen. But this is a chart here, and the one I want you to really focus on is the blue line. So this is the time frame. So we're looking at November, so the end of 2011, going all the way out through 2012, 13, 14, all the way up to the current day, July 2017. What the blue line is mapping here on the left axis is the rate of the euro-dollar exchange rate. So back in 2011, November, we were trading at 135. You can see here the peak that we saw was really kind of March, April of 2014. That was when we got to the very close. I remember that time quite clearly. 140 was a really big barrier on the upside. Got to that point, then we saw this big move to the downside. We've defined a low for the euro-dollar exchange rate, looking around kind of 105, 106. That was not that long ago. It's beginning of the year, in fact. And then we've recovered since. Economic conditions have continued to pick up, and inflation have seen a bit of a pickup as well in terms of the eurozone, albeit still some way from being strong conviction from target. The key thing here, though, are, as you can see at the bottom, you can see some specific words. Now, what Deutsche Bank have done here is they've mapped the specific words issued by Mario Draghi, the ECB President, on the euro, and how he defines it when it's at that specific price point. So Draghi is as Deutsche kind of term it, is a fan of standard rhetoric responses to common questions. What they're suggesting here is that one of the key things for a central banker to do when they're delivering a press conference is to try to mitigate creating volatility, i.e. quite frankly, just swerving questions quite skillfully in order to not give away too much, or not certainly commit anything that would mean then the market kind of jumps on that as a predefined signal quite clearly that you're going to hike rates, for example, or you're going to end QE. The president will want to hint and guide the market as to that's where he's heading, but not necessarily full out commit, because who knows, external situations could change and he might need to change course. So he wants to keep all options open. Now, Draghi has a graduated response to how he defines the exchange rate, with the impact on inflation and growth escalating from important to very important to significant. Now, for some of you guys in the trading live room might have been trading for some time. If you remember, before Mario Draghi, there was the French chap, Jean-Claude Trichet, and if you remember, code words were really important for him. What he used to do is use this graduated wording in order to signal to the markets when an interest rate hike may be coming, i.e. the term that he would have used front-running, let's say, the word inflation, i.e. important or very important or significant, would signal to the market we are 3 months away, 2 months away, 1 month away from a policy change. This is how this works. And so what we're looking at here is when the euro-dollar pair is up at around 135, 140, it's very important. That's how he's termed the euro exchange rate. Now, what people are looking at the moment is how is he terming it at the moment? You can see here important market forces, and summer tension is the most recent one. What the market's going to be looking out for then is when he gives his speech tomorrow. So Draghi is giving a keynote speech at the Lindau Economic Symposium in Germany. So that's going to happen tomorrow morning. What a lot of people are thinking in the market, although we don't know exactly what he's going to say, is that Draghi is also speaking at Jackson Hole at the end of the week. But that's going to be delivered in North American trading hours. If Draghi wants to make a good hint to really the large majority of market participants trading European assets, you would think logic would be he's going to communicate that tomorrow morning. A hint will come in his German symposium speech. Then it takes a little bit of the heat out of the importance of the Jackson Hole one, and if anything, he can use Jackson Hole to then re-communicate if the market misinterprets what he says on Wednesday. I hope that kind of makes a bit of sense. But this is how the forward planning, you can almost start to build your reference point of what to look out for from Draghi. So really, I think he actually speaks at 8 o'clock tomorrow morning. I will get confirmation of that later today, and I'll of course relay that to you. But I think that speech will be really important. So you're going to have to be pretty switched on early on tomorrow. One thing here then that the Deutsche are looking at in their summary is that how do you know if Draghi's being hawkish or dovish? And so accepting, in terms of the exchange rate, a more benign comment on the exchange rate, for example, accepting that it is an outcome of market forces, would be hawkish. So basically you're saying, well, there's nothing we can do, these are market forces which are driving the euro currency, so therefore they're comfortable with the inflation rate going up. That means that they can continue to the tightening process and not be concerned about the higher exchange rate. The opposite of this, of course, if it were dovish, if Draghi describes the exchange rate as very important or significant, i.e. he escalates his concern about higher inflation, or he says the need to avoid a euro overshoot suggests the risks are tilted towards the dovish side. So again, if avoiding a euro overshoot would suggest that the ECB are concerned that if they tighten policy, the euro is going to excessively strengthen, which would be against their objective in terms of managing the economy. So hopefully that just gives you a little bit of an insight. Another hawkish kind of takeaway from when Draghi speaks could be if he repeats that ECB forum in Central Portugal we had about 2.5 months ago or so, when he talked about reflation. Reflation meaning then that we're on the up in terms of inflationary prospects, giving the ECB confidence that they can continue to follow a plan of gradual tapering of their QE program. So we'll go over this a lot more detail over the course of probably today ahead of tomorrow's speech. But these are the things that already, just given the market, certainly yesterday overall, although we did see some movement in the North American session, it was quite quiet, particularly in the European morning, because people are waiting for this key speech. And then you've of course got Janet Yellen speaking at Jackson Hole on Friday. One of the other things here that's quite interesting, I just wanted to quickly show you, is this figure 5. So on the right hand side, and this is ECB Euro commentary tends to be most intense basically when the euro exchange rate is low or is particularly high. And so what analysts will do is they'll map here on the bottom axis is the frequency of exchange rate being mentioned in the press conference, so going 0 out to 20 times, almost 26 times if you look here. So you can see the higher generally we go, or the lower in this exchange rate, the more comments that get made about it when it's at its extremities. The one thing you will note today's current price, we're trading 118. If we trade 118, you can see here it hardly gets a mention at all. That's seen as, I guess, more of the sweet spot of where the ECB feel most comfortable. And so does this then, looking at the stats and the historical kind of patterns of communication, does it mean then that we shouldn't be expecting too much here from Draghi because of the fact that the precedence has been set that they should be fairly comfortable at this kind of price level? Okay, a few other things to be aware of from the news, just quickly. This was a comment which came out, you can see here, 6 hours ago, so this was overnight. OPEC to discuss ending or extending production cut in November, according to Kuwait. So OPEC will discuss at a meeting in November whether to extend or end production cuts, according to Kuwaiti oil minister. At our next meeting at the end of November, the most important items will be concerning the fate of the agreement to extend or terminate the production cut. I think the extermination of it would be quite surprising. The extension of it would be unsurprising, I guess, would be the way I'd probably be looking at that. Worth noting, I guess, because Kuwait obviously is up there, I believe they're probably after Saudi, Iraq and Iran, the fourth largest OPEC producer in terms of million barrels per day kind of quantity. And looking at oil this morning, running into a little bit of resistance around this pivot point, which obviously sits about 10 cents shy of the $48 handle, just psychologically. So we're up around 33 cents. That might just be helping some of the general slight risk on with equities seen marginally higher this morning. Elsewhere, North Korea. What's the latest with North Korea? North Korea says US faces merciless revenge over their drills. No let up then in the rhetoric from the North Korean side. They've threatened the US today, saying it will face merciless revenge for ignoring Pyongyang's warnings over those annual military drills with South Korea, which of course commenced yesterday and will be continuing for the next 9 days, actually, until all the way up to the end of August. As you can tell, though, looking at the charts, the market is completely unfazed by that type of commentary. I would say it's not unusual to hear, although it sounds awfully aggressive from North Korea. This is quite a normal reaction to these military drills from what we've heard before. Certainly, the situation is not gone away, and I'd still be monitoring closely what comes out in the Squawk and what circulates possibly on Twitter if there were any signs of a test missile launch from North Korea during a military exercise by the US and South Korea. This could quite quickly cause a lot of tension to re-emerge in the market and undoubtedly would create a short-term flight to quality move across assets. A couple of interesting charts here that I saw, and I just thought I'd quickly show them to again add a bit of context to what we're talking about. And this is the border between North and South Korea. You've probably never really looked at it at this type of detail. This is the Korean demilitarized zone. It's one of the world's most heavily fortified borders, and one of the key things you can see here is that Seoul, which I believe is home to approximately 50 million people, so only 20 million shy of being the entire Great Britain population, so not small by any means, is right sitting within artillery fire range from North Korea, which is why this is such a contentious issue in this particular geographic region. A couple of other interesting charts here just to quickly show you. This is looking at, and it's quite useful to just be aware of the type of presence and which type of military base that they have and which country. So the three main parties really being North Korea, the US, which you can see is dotted across Japan for its strategic position in terms of the geography of the East Asia and East China Sea and the Sea of Japan, and then China kind of all across the coast. One quite interesting one here as well, to put it into a bit of perspective. This is so you're looking at the dark shadow on the bars, if you like, is the active people or military personnel. So this is active, China some 2.1 million, the US only has about 82,000, Japan 250,000. So if you look at China and North Korea, we've talked about the historical context that if push came to shove, and if the US got threatening and made the first move, China has already said that they would look to them protect and step into the situation, North Korea. Then obviously we're looking at an army with the size of way outnumbering Japan and the US. The one that's obviously extremely large, given the reserve call-up that could in effect be used, is South Korea. In theory, this could be an additional 4.5 million people that could be called up to service. So again, the North Korean issue, I'd say, has taken a bit of a backseat. Obviously, Trump has come under the spotlight for various other reasons. This morning, I saw looking at the sun without using his protective glasses. So, you know, setting a good example as ever is the US president. But Korea, again, it's something you've just got to be aware of that is still lurking in the background, and it would only take one such incident as a miscalculated, coordinated, if you can call it that, test missile launch that could quite easily see this return to the fold. So something to just be aware of, and to possibly just keep an eye on. Okay, let's have a quick look at the calendar for today. So for this morning, we do actually have a couple of things to look out for. So it's a little bit more interesting than what we had from Monday's session, certainly for the UK-European portion of the day. We've got UK public finance data. I would say very seldom does this really have much of an impact on the sterling currency. I'd certainly keep an ear out for it. You can already see here from the cable chart that previous low from yesterday has acted as pretty good support here. So I'll be keeping an eye on that. ZEW though is really the main figure for the morning. This is a German figure. This after IFO, business climate, is probably the second, or one of the top tiered piece of economic data that comes out of Germany on a monthly basis. For any of the interns, what is ZEW? Well, I all know that you've done your homework and you've read trading economics, so I know I can look at you and ask any one of you a question of what is ZEW, and you can give me the full, thorough rundown. Especially the stage 2 guys. That's right, I'm looking at you. So what this is then, in summary, is a survey of about 350 different analysts across different firms, and it's asking economists and analysts their current and 6-month outlook on expectations, essentially. How do they assess current expectation? What's their forward-looking assessment on the economic environment going forward? So the difference between this and IFO is that this is analysts and economists, IFO is companies. But this can be market moving if significantly out of line enough. The economic sentiment is expected at 15, slight deterioration on 17.5, but looking at this data point overall, you can see it's been a fairly consistent, showing fairly strong outlook for German economic expansion. And so, not really expecting too much, but certainly something I would be watching if I was looking at the Euro, the DAX, and the Bund future. Going forward then into the afternoon, we've got some monthly house price data coming out of the US. Really, that's much lower tiered data. I'd probably classify that as tier 3, so not market moving. Richmond Fed, composite index, services index, and so on. Again, this is not really major data, by nowhere near the likes of the scale of, say, inflationary readings out of the US. So I'd kind of be, again, aware of this numbers coming out, but not looking at them for a potential catalyst to really define the session sentiment or direction. And then, as per usual, we'll get the API crude oil inventories. These will come much later in the evening at 9:30, and that will be our reference point then for the accompanying DOEs, which we'll get on Wednesday. Okay, so going to leave it at that. In summary, fairly quiet, I would say, news flow from overnight. We had a mildly positive finish on Wall Street overall last night, which is translated into a reader through into the Asia Pac session, which consequently we've got slightly higher equity futures this morning in Europe, and that's led to lower fixed income and gold prices. You've got some data coming out. German ZEW is really the main feature of the morning, so keep a close eye on that as well. Okay, guys, have a good day. Any questions, please feel free to reach me in the chat. More than happy to help. Thank you very much.